Alrighty, good morning, good morning, good morning, good morning. Today, we are going to be going over a few of the concepts from the grand plan that we began discussing around 3 months ago. Now, I was really hoping for the markets to be calm today, so that way we could really focus on this without people being distracted. But hey, the markets just don't want to calm down for us. But if we wait for permission from Bitcoin to discuss our plan, we'll never really get the opportunity to do so, right? So I decided to be disciplined today and say, you know what, Sean, you're going to go over at least a couple of these concepts with them. So that way they stay aligned with the bigger picture. And then later today, if we do have the time, we're going to go over some price action as well, because Bitcoin is looking interesting over here. But I do want to draw your attention to what we were discussing a few months ago, because if you guys do forget the bigger picture, you guys may end up being caught off guard, getting shook out, especially if you have a good position. If you did get into position with the rest of us, you do not want to lose that good position, right? And for those of you who are new to the Mango community, perhaps this grand plan may help you have more conviction in the positions that you do have, or the positions that you're looking to build. So let's go ahead and get started. Over here today, we're going to be discussing the 4 stages of the mining cycle, right? We introduced this idea around November of 2022. We had talked about how we can use the 4 stages of the mining cycle to understand how Bitcoin moves through its bear market to the bull market cycle, right? Well, today we are also going to be adding some confluence to that idea, because right here on the right hand side, I have a screenshot from Cross Border Capital's Michael Howell, who discussed the liquidity cycle in a recent podcast on forward guidance. I really recommend you guys watch that podcast. But essentially, what he does discuss is the liquidity cycle that is beginning to uptick as well. So we do have confluence on an idea that we discussed 3 months ago, right? So this is going to be really interesting. We're also going to be quickly talking about DXY and how it moves in correlation with Bitcoin, and not just what everybody else is discussing, right? Hey, Bitcoin go up, DXY go down, but in a far more nuanced way, right? If you guys do remember, around 2 months ago, we had gone through the entire history of Bitcoin in conjunction with the death crosses on the daily DXY chart, right? We marked out every single one of them, and we found a really interesting pattern between the initial death cross, the fake death cross, and then the booming Bitcoin cycle, right? So we're going to quickly talk about that. We're not going to go through the entire history today, but I will do a separate video on that again with you guys very soon. All right, so let's go ahead and begin. What I want to do for you guys in order to set the stage so that way you guys understand where we're coming from is to show you a screenshot from all the way back in November 2022, right? This is a screenshot from November 23rd. So this was 3 months ago. And you guys can see that we were talking about multiple components that formed the grand idea. In fact, this is only a few of them, right? This doesn't even touch on the Ichimoku technical analysis, the Fibonacci technical analysis, the cascading pattern. We were putting in multiple ideas together, right, that all had a probability attached to it to come up with a holistic probability for our grand plan of Bitcoin bouncing from those lows. Now, in today's video, we're not going to be going into detail on all of these components that you guys see over here on the screen. I can quickly talk about it. We had discussed the realized profit and loss ratio, for example, on the on-chain metrics, and we pointed out how every one of the times we saw this peak at the bottom over here, it has lined up very well with Bitcoin's massive cyclical lows, right? And back in November, we were expecting this to start upticking if Bitcoin were to put in its low over there as well, right? But that was only one of the components. Remember, on-chain data, you can't rely on it. We had discussed some caveats in regard to this, which is why we had also discussed the total hash rate with Bitcoin's mining data, and we were expecting this to downtick, right? And what do you know, guys? We got both of this right over here. We did see the profit and loss ratio from the on-chain metrics begin to tick up, and the hash rate, we were expecting a down move over here. We got that. In fact, it has put in a higher low and now a higher high. But the focus of today's video is going to be this row right over here. Okay, guys, over here you guys are seeing the 4 stages of the mining cycle, and right by its side is the Dixie chart, right? The Dixie death cross, where we had marked out every single one of the death crosses through Bitcoin's history and how it has lined up very, very well with Bitcoin forming its initial base and then its big move, right? Because remember, there was a caveat to this as well. There was a caveat over here. There was a caveat over here. There's always a caveat. But when you put everything together, that's when you get the strong probability and the confidence in your trade. And guys, conviction is so important in your trade, right? Because conviction allows you to sit through volatility. Conviction allows you to sit through the entire cycle and cash out during the gold rush, right? So speaking of which, right over here, the 4 stages of the mining cycle, you guys can see that I had a star marked out right over here. Okay, remember, this was all the way back in November 23rd. At that time, I was saying that, hey, we are in the shakeout phase of the 4 stages of the mining cycle, and we are going to be leading into the rising bull market. And we had drawn out a date, right, which we had derived from looking at multiple other things. But in this chart over here on this screen, you guys can see that on the Dixie and Bitcoin chart, I'd marked out right over here, guys, right over here, I'd marked out late Jan to early Feb, right? We were looking for around a 3rd week of Jan to early Feb. If you guys remember, we were looking for the rising bull stage to begin. And what do you know? Bitcoin is currently sitting at around $24,000. We had a 50% bounce off the lows. So there's a good argument that can be made that we are indeed in the rising bull stage. But remember, guys, the rising bull stage is very, very different from the mining gold rush. The mining gold rush is when things are going parabolic. The mining gold rush is when the miners get exuberant and they overspend on their capital, on their operational expenses. And that's when we get the inventory flush out, leading into the final shakeout. And again, the shakeout phase, we had a separate chart for that as well. I have it ready for you guys right over here. Let me go ahead and pull it up. Again, this is from the same date, guys, November 23rd. We had discussed so much that day. And here's a chart, right, along with Charles Edwards' tweet, where he had pointed out the Bitcoin miner bloodbath, right? Again, all the way back in November 23rd. And we had said that, hey, we are in the shakeout phase. Okay, we had also pointed out, remember, okay, there's so much to talk about. Jesus, I do apologize, guys, but I am trying to keep this as brief as possible. But over here, we had pointed out the potential death cross. The death cross had not happened yet, okay? The death cross had not happened yet, okay, November 23rd. We said it's likely to happen leading into next year. And that's going to be one of the signs that we're going to be looking for Bitcoin to have its massive bounce as well, but not the major parabolic run. Because remember, the parabolic run too was going to come only after we get the second death cross. We only got the first death cross, okay? We are looking for the second death cross. So we're still over here. We are looking for the second death cross, which is going to take us from here to here, okay, from the rising bull stage to the mining gold rush stage, or at least in the middle of the two, okay? But the early sign came from Dixie losing its weekly dynamic, okay, weekly dynamic. And we're going to give you guys an update on this as well. Okay, so all of these are charts from all the way back in November 23rd, right? Let's go back to our updated charts, okay? We have our 4 stages of the mining cycle. Back then, I had proposed that we were sitting somewhere around here. Now, I would propose that we are sitting somewhere around, let's go ahead and use a new color, somewhere around here. I don't even think we're in the middle of the stage, guys. Okay, I still think that we have moved only this much, okay? So we have yet to go here, and then we have yet to go here, and then it's going to be a while before we are in the center of the mining gold rush phase. So there's a long way to go. There's a long way to go. Interestingly enough, guys, this lines up very, very well with what Michael Howell recently showed in a forward guidance podcast, okay, where he discussed his liquidity cycle, 4 stages of the liquidity cycle. Now, I'm not going to go through this in detail, but he pointed out that we are currently on the macro scene moving from the turbulent stage to the rebound stage, okay? Remember, this is the liquidity cycle where we have rising liquidity on the top over here, okay, and credit risk at the bottom, right, where you have high credit risk over here in these 2 phases, turbulence phase and speculation phase, and we have increasing liquidity from low to high in the rebound phase to the directionally calm phase, right, of the stock market. And if you guys think about it, when the stock market is going calmly in one direction towards the upside, Bitcoin tends to have its massive parabolic move, right? So we are not here yet. And if you guys do think back to all the videos we've been discussing, especially our Ichimoku technical analysis combined with our Dixie liquidity thesis, we are seeing something very, very similar, where we are not in this phase yet, but we are more so in this phase, right, of the liquidity cycle. So Michael Howell was essentially saying in that video that we are in the early stages of the liquidity rebound. Now, if you compare the liquidity matrix and the 4 stages of the mining cycle matrix, you are going to see parallels, but I don't want you guys to compare them one to one, right? We can use Michael Howell's line over here as well. It's going to be approximately correct, but precisely wrong, right? In fact, I do believe that the crypto markets are always going to be slightly ahead of the macro markets in detecting liquidity, right? Crypto, in fact, Howell mentioned this in his podcast as well, that crypto is a really, really good barometer of detecting liquidity in the system, right? So if you're seeing crypto rise, it is essentially a sign that, hey, increasing liquidity is... He used crypto, by the way, as a way to strengthen his thesis that we have rising liquidity. We are using his thesis over here of rising liquidity to strengthen our thesis of, hey, crypto is going to go into a bull run. It's funny how that works. But let's zone in on liquidity. What exactly determines whether liquidity is rising or decreasing? Now, there are many components to whether liquidity conditions are rising or increasing, but one of the major components that we have discussed multiple times on this channel is essentially the dollar, right? Which is represented by the Dixie. Okay, if the Dixie is increasing, it means that liquidity is actually decreasing, right? If the Dixie is actually decreasing, it means that liquidity conditions are increasing. Why is that? Well, it's because a lot of US dollar denominated debt becomes a lot easier to pay off when the Dixie weakens. To think about that simply, let's assume that you are earning in Canadian dollars, okay? If you are earning in Canadian dollars, but instead you owe your debt, let's say your student loan in USD, you are hoping for the USD to weaken because your dollar, let's say you owe 100,000 USD, right? Well, usually you'd have to earn around 130K CAD in order to pay off your $100,000 USD loan. But if the dollar weakens, maybe you have to earn only $100,000 in CAD to be able to pay off that same loan, right? Well, you have now increased your liquidity conditions by $30,000. So you can go on that really, really nice vacation that you want to go on, right? Or maybe you want to buy Bitcoin with that $30,000. Maybe you want to invest it in the stock market, right? Maybe you want to buy your favorite shitcoin. Either way, you guys get the idea. The Dixie weakening is one of the easier and simpler ways to keep an eye on increasing or decreasing liquidity conditions. So let's break it down. If the Dixie is weakening, we know that we have increasing liquidity conditions, right? So what we want to do is keep an eye on signs of the Dixie weakening. What's one way to keep an eye? A very, very simple way to keep an eye of trending Dixie weakness. Because if we have trending Dixie weakness, it would mean that we have a trend of increasing liquidity. Correct? Right? Which is what Michael Howell is showing over here on his chart as well. And the easiest way to keep an eye on trending Dixie weakness would be the death cross, right? And right over here, you guys can see, again, this is all the way back from November 2022. We had marked out every single one of the death crosses, and we had suggested that we are likely going to see a death cross very, very soon in a couple of months on the Dixie chart, which would imply increasing liquidity conditions. But remember, just the first stages of the increasing liquidity conditions, because we had specifically talked about how we are likely going to see the first cross and then the second cross and then the real cross, right? Well, let's zoom in and see what we have so far. We already got our first cross and pretty much where we expected it to happen. But look at how the bands are turning, guys. Let me just go ahead and center this for you guys. Look at how the bands are turning. If Dixie keeps bouncing the way it has, because by the way, when we let's go ahead and readjust that. When we had talked about this back then, we were here. That lines up with this. Now we have had our down move, we got our cross, but you guys can see that we are kind of bouncing. Okay, we are kind of bouncing. If Dixie keeps bouncing, we're going to get that second cross. It's going to be bad for Bitcoin and crypto in the short term if Dixie keeps bouncing, But what that means is that we're going to uncross again, and that would set up DXY for the recross of the dead cross. And that's when I will get long-term bullish, and we're likely going to see the signs on the Ichimoku chart as well. And we'll talk about that in a separate video. But remember, guys, again, let's scroll back up. DXY weakening, trending DXY weakness implies increasing liquidity conditions. Okay, that's what we spotted all the way back in November. We got that move. We got the first death cross. Now the big question is, do we get the second death cross? Well, let's scroll back down over here. What else did we talk about? What were the early signs for the first death cross? It was the weekly dynamic on DXY being lost, right? We had this, and then we lost the dynamic right over there on the weekly chart. This was in October. By the way, guys, this chart over here where we lost the weekly dynamic on DXY was all the way back in October. Remember, the dynamic was made for this. The dynamic was made for us to be able to spot out early signs before the rest of the trending indicators, right? Well, now, if you guys look right over here, this is the updated chart. You guys can see that the dynamic is now saying that we are right up against the resistance on the DXY chart, right? We got our breakdown. We got our down move. Now it has bounced and snapped back to dynamic resistance. Does it break and reclaim the dynamic, or does it reject over here and come back down? If it rejects and continues its trending move towards the downside, we are likely going to see Bitcoin as well as other risk assets continue its march to the upside. If, however, we see a snap back up on the DXY chart, it's likely going to line up with something major happening in the macro markets as well. So we have to keep our eyes out for that. Remember, in our deep analysis on the DXY and Bitcoin correlation chart, where we went through every single one of the instances, we had pointed out how the DXY chart was a really, really good leading indicator of when the macro markets were sniffing out risk before a major event. Right over here, you guys may not be able to see it, but DXY had a massive rally leading into the big COVID crisis, right? So the markets were kind of beginning to go risk off and buying the dollar leading into the COVID crisis. So if we start seeing the DXY start snapping back up and reclaiming the dynamic and making its way back up to all-time highs, it's likely going to line up with some kind of risk event. And I do want to wrap up the video right back up over here on Michael Howell's liquidity matrix, because he had pointed out in the interview as well, by the way, he said that just because we are in the rebound phase doesn't mean we're going to go smoothly into the calm phase. He mentioned how there's usually a risk event that takes place between the rebound phase and the calm phase, where you do have a correction of sorts in liquidity that forces the Fed, forces central bankers around the world to inject liquidity into the markets in order to prevent a catastrophe, and then you lead into the directional calm phase, right? So we have only begun the initial phases of the rebound phase. We are not leading into a mania phase just yet. And it's very, very important to keep that at the back of your mind. Every time you're feeling that eagerness and that FOMO to get oversized, overpositioned, keep in mind that we aren't in that phase of the market yet, and you will get an opportunity to buy a dip. This phase of the market, guys, is to be patient, wait for the fear, wait for the dips, and buy appropriately, right? Keeping in mind that there will likely come a massive dip as well before we get the big parabolic move eventually, because we're not in this phase yet. We're not in the mining gold rush phase yet, right? Not in the calm phase of the equity markets, not in the mining gold rush stage of the Bitcoin markets. So again, I hope you guys enjoyed this video. I know there was a lot, but guys, this is a lot. This is a lot, and I'm sorry, but this is what it's gonna take. This is the hard work. This is the mental gymnastics that we have to go through to ensure that we conquer these markets, to ensure that our community is always 10 steps ahead of every other community. So if you guys are enjoying these videos, please leave a comment down below. Let me know if you guys did. If not, let me know that you guys didn't enjoy these videos, and I'll stick to the regular TA videos. Either way, leave a comment down below. Hit the like. Smash the subscribe if you're new here. I'll see you guys in the next one. Do the mango way. Do the easy way. Do it the stress-free way. Ciao.